Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I would like to talk about a couple of incentives that have actually only just become law kind of after the fact that anyone in business should be aware of. So there's a skills and training boost, there's a technology investment boost, and also this financial year there's a small business energy incentive as well. And it won't necessarily promote you to go out and spend a lot of money on improving some of these things, but our view would be that it's really about just capturing, if there are opportunities for you to save on tax, to get a tax offset, then that's exactly what you should do. And it's like anything, you don't know what you don't know until you know it. So it's important that your bookkeeper is over the top of these things, and so are you, to ensure you're getting the most of them. So, let's talk about the technology investment boost first, because that's the one that's sort of already expired before it was approved.
Yeah, that's right. So the ATO or the government came out with the technology investment boost during the federal budget, but only got legislated after the eligibility period. So we were counselling clients to keep accurate records of anything they buy, any capital expenses that they incurred when it came to sort of technology, whether it be new computers, printers, upgrading software systems or payment systems and so forth. So the basic eligibility criteria is that you're a business with an aggregated turnover of less than 50 million. And the deduction is basically 20% of the eligible expenditure. So 20% of the capital expenditure you incur on these improvements that you do. It is capped at a $20,000 benefit per year, or $40,000 in total. And this covers expenditure incurred between 29th of March 2022 to 30 June 2023.
So, Mena, if you then, let's use an example. If you went and spent some money on a technological improvement in your business, so one in our business, we went and bought these really wide screens for everyone to use instead of having two screens, for example, which made us a lot more efficient, I think. In that situation, if you spent $10,000 on something like that, not only can you deduct the $10,000 as an instant asset write-off, but you can also deduct another or have a tax offset for 20% of that cost, so $2,000, for example. So I'm already getting a tax deduction for the actual expense and then a bit of a bonus, a 20% bonus. And so if my business pays $50,000 in tax that year, it's only going to pay $48,000 because I've got that offset. That's
correct? That's how it works, yes.
Yeah, so it's good. It's not going to shoot the lights out, of course, particularly for really large taxpayers, but really the answer there is to try and capture all expenses, technology-related expenses that could think or argue are going to comply with this boost, so that you're able to maximise that full $20,000 offset.
Similarly, the skills and training boosts works in the same way. So again, expenditure incurred between 29 March 2022 up till 30 June 2024. So it gives you an additional year than what the technology investment boost gives you. And it gives you the same bonus deductions, 20% of eligible expenditure, with no limit though. You still need to be a small business with an aggregated turnover of less than 50 million. The eligible expenditure on this one is a bit more, I'd like to say, specific, because it needs to be done in Australia or online by a registered training provider. So it can't be just any training or CPD or anything like that. It needs to be by a registered training provider.
And the last one we wanted to talk about, Mena, was the energy boost or energy efficiency incentive. And that provides, again, another 20% tax offset for the amount spent on buying depreciating assets that use electricity more efficiently. And so this would be most appropriate to businesses that have plant and equipment. that are using a lot of power. So there's obviously an incentive there to try and improve that and use less power. The expense has to be incurred in the 23-24 financial year. So at least with this incentive, they've approved it before the period's actually finished, unlike with the technology boost. So it certainly gives people a bit of a runway to sort of plan those expenses and so forth. But if you have plant and equipment that is using up a lot of energy, maybe even the old-fashioned fluorescent lights, for example, switch over to LED. LED lights use a lot less electricity, and you've been thinking about doing that for a while. Well, this year could be the best year to do it to try and maximise that $20,000 tax offset. So again, if your business uses plant and equipment that sucks out a lot of electricity, it's something that you might want to talk to your holistic accountant about. So if you'd like to learn more about these incentives and boosts, we have posted some links in the show notes to the ATO website, which will give you a little bit more around the eligibility criteria and those sorts of things. And of course, if you've got any more questions, you should speak to your holistic accountant. That's it from us for this week. Until next week, bye for now.